Hey, it is Gio from Strategic Edge Trading, and in this one we are going to be talking about the BW Momentum Oscillator, aka the Big Willie. This one, uh, it really we're tracking accumulation, which is going to happen beneath those big lines right there. Distribution, which is going to happen above the upper lines. And then we're tracking when it enters the range and when it exits the range. Okay, and that's what you're seeing with these highlighted lines, right? So here it would say this is the BW telling us we like this short, and here we're saying we like taking profit somewhere around here. And you'll see that it also coincides with a yellow glow for a high probability reversal. Looks like there was a red glow there, maybe. Let's see. Oh yeah, I'm getting some red glow there. Red glow telling us that we hit the emergency brake, so it's already time to get out. Um, but yeah, so that's what the Willie's doing. And how do we use that, right? So right here I see that we have a high probability reversal. We are playing off of a key level, so boom, check and check. How do I get that third check and see if we have room to go on the BW? So right here, as we get the storm cloud kicking off, and we look at the fast Willy value at a 66, I mean, that's great. Anything, from 80 or less, sometimes I'm a little weary if we're still down in the extreme because it can chop there for a while if it needs to really, they're looking to accumulate a big position. And you'll see, accumulation, it's not always the most obvious thing when you're starting out. Sometimes, I can be reading price and miss it myself, but um how I like to kind of spot it is when we're getting these dips lower and then lower and then just a little bit lower. And when that happens about three times consecutively, that is, to me, it's a pretty telltale sign of an accumulation cycle because we went a little bit lower, a little bit lower, a little bit lower, and then we rocket off in the other direction, right? So the best time, in my opinion, to get into a trade is right around there when we're starting to enter the range, and the range being defined by, this was the last price leg right here. So we're mostly judging to around the top of that, maybe a little bit beyond. Okay. And that's how that calculation works because it is averaging out. But um, what would make me potentially want to stay in that trade, considering, you know, typically we're looking for a move from one extreme to the other? Well, what we know is that it's going to want to distribute up here. So even though we're reaching the extreme, if my target level's up there and we're in clear skies, which means that I've got so many levels of confluence and price is reacting accordingly. It's responding to all those assumptions that we have, right? It's still continuing to cooperate, even though I'm in the upper extreme. Me personally, I feel confident with the safety line trailing me right there, and I want to make it to that magnet level. So until I see it take one of those key levels, I'm not always super convinced that the move is over. And look, as soon as we hit that one standard deviation move, what happens? We get the red glow. We start to see that BW really tighten up, because the wider the cloud delta, the stronger the move as it's occurring. And then we really peter out strength. We get that red glow. We chop sideways, and then the next thing that we're seeing is um, uh, a bearish storm glow to start going south and BW corroborates that. So what we're really looking for with the BW is confluence. We're looking for opportunity to go from somewhere high to somewhere low and from somewhere low to somewhere high. Now, this one is pretty interesting because you don't see this very much. Usually, when you get a yellow glow, it's just for a couple of bars because that reversal is imminent. This was a tricky piece of price action. You see, the retracement actually comes and sweeps out this this little level of created liquidity with those semi-equal highs there, right? So as it comes up, you see, yeah, storm entry right here hits our storm line. Everything about that is normal, but the previous assumption, starting back here was bearish. So if you were still in that, you probably shouldn't be, but you could have re-entered here, 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 taking this delta squeeze, so many options to get back into a good trending move. What I'm thinking, is that when this happens, we violate the safety line. Well, guess what? The BW calc is already in the extreme. And since we violated the safety line, we're already in the extreme. No matter what, even though this is in, what would be clear skies otherwise, because you're seeing BW confirmation in terms of it is bearish. This cloud is bearish. Price is beneath the cloud. It is bearish. We have the safety line. It's being respected. All of these things are being hit. The reason why Stratus Engine just wasn't liking it was because we violated the safety line already, and then we were already in the bearish extreme, and it just said, I don't think that is a good one. And I mean, to miss out on one move when you catch so many others. I mean, even if you entered over here, you still exited a profit somewhere. You should have. Um, but coming down over here, uh, what do we get? A storm cloud entry. What's happening on the BW? It looks like we just flipped bullish and we're emerging. We're emerging from the extreme, right? We're coming back into the range. Well, I like that. And right here, well, on that storm cloud formation, I'm probably going long. I know what you're thinking. There's a red glow, but that red glow is negating a bearish cloud, right? So I'm trading with the cloud line and the BW, right? And we played off of the London lows. So we've got those three layers of confirmation that we're looking for, all that confluence with the BW telling me there's room to go. And where do I take it to? The storm line, boom. Or, you're ambitious, you want to hold for uh, your target line right here, the London highs, you hit it. Probably have to get out on this emergency brake right there. So that's what we're looking at when we're looking at the BW. The BW itself does have a trade or two. So if we show the peak markers, the peaks, they're not obvious. You would have to be pretty zoomed out to even really see them visually in terms of the lines. But the peaks that are being measured are essentially the BW is spiking and that always corresponds to price action. So we're going to take the price here from this spike and the price here from this spike, and we're going to compare the two. And if there's any sort of divergence, um, then it may trigger a um, divergent peaks bonus signal in the Stratus engine. The yellow peaks show that we have hit three different um, times where we chopped up, right, while we were already in the extreme. And like we talked about before, um, I love to see those accumulation and distribution cycles. They tend to come in waves of three. So occasionally you'll catch something really nice where it'll set up and you'll see a 1, 2, 3 peak, and then it'll cross down into the out of the extreme and into the range. And I used to just trade that. I mean, before I developed the entirety of the SkyMap system, I mean, that alone was reason enough for me to take a trade. once upon a time. Now there's additional layers of confluence that obviously make this a much more well-rounded tool. So I don't really encourage the utilization of it in that way anymore with like the traditional three peak cross is what we called that trade. But that is something that a little bonus trade if you're curious. So if we take those peak markers off or keep the peak markers on and turn on trend day mode, you're going to see a little difference here. You see now those triangles have flipped. And basically, if it's a trend day, and this day was not a trend day, so this is not a good example. Let's find one. This is a trend day. Get some up movement. When trend day mode is turned on, essentially, um, you don't get a lot of opportunities outside of the BW. So, or outside of the extreme, because it stays in the extreme for the majority of the day. Like it's just going to stay like this whole price leg where uh, it just stayed a yellow glow because it started in the extreme. Well, anytime it made a peak, then that would be an opportunity for us, like a high peak, that would be an opportunity for us to enter going short because we know that it's a trend day. And when I say trend day, I mean really dealing in the outside extensions. We're looking at like, a 3 or 4 standard deviation run on the day. If you're out there in no man's land on your magnet levels, you're beneath it. You already went more than 4 standard. The odds of mean reversion at that point are so low. I stopped looking for them. I stopped looking for opportunities to fade that move, and I just either capitulate or I sit out, right? Because there's no point in fighting the trend. If it's just that far gone, the only thing to do is go with it. Um, that is the BW. I mean, it's used in the back end calculations for the Stratus engine, but it's definitely a pivotal tool to get your confluence, to make sure that you're entering in places that make sense. So, I'll reiterate once more, the three things that you want to see are play off of one of those magnet levels. You want to see it give you the right glow, and you want to see the BW tell you that you've got room to go. You're not already in a lower extreme trying to take a sell. You're not in the upper extreme trying to take a buy. And that is how we use the BW Momentum Oscillator. Catch you on the next one.